Here we have a major weekly update. A week ago, it would be 1 week ago when the bull rally came off of that bottom of this S&P, where our price target was going to be 1075 on the S&P. We got to the low of 1074.77. How nice that was. That was your second calendar year low. Right over here in this particular range of this area, you battled for weeks and weeks and weeks until we got down here, and then again we have a 2-week rally, except this rally here is part of a 7-day rally for the bull within the overall bottoming calendar year low going into a major earnings. Now, what sparked the rally back up to this major weekly top, you have come off of the MACD bottom down here, meaning that you have a turn, and that the blue line, the 10-week moving average, for the very first time for the bull, is you've got a flattened out moving average. And that the 10-week moving average, just like it went down when the bear move started, the bear got it down and you were declining in all these weekly moving averages. And they still are. There's still a lot of overhead resistance going forward, no matter what, because you still have a 20-week declining over there. But what would make that is to understand that the 200-week moving average is at 1141 on the S&P, and you're well above it, right back into the major resistance level. This is how year-end, going into the fourth quarter, everything that we talk about, taking these great moves up and then having to get out from the out of the bull side back into the bear, which, you know, and we went straight down. This is that same 2-week volatility back up, just like we had a 2-week volatility here up, but there is no selling action here at all. And that means that we got a turn on the MACD. We got to levels that SMF talked about, that in the shorter macro, that you can't help, but the bull will get a good rally when you get down here on a yearly oversold MACD level. I mean, that thing got down here to where buyers start stepping in and money goes to work in the calendar month of October. And when this thing was down here to minus 38.8, you can see here now it's only minus 33. So it's working as far as this great 7-day bull rally goes. And it's right back at the top of the range. We have yet to take that out. We need to close 4 weeks consecutive above this blue line. The blue line must roll up, and every time it comes down, and that 10-week moving average, I'm going to tell you now, is 1166. That's going to be ultimately the support level. This 100-week moving average, we're taking it out right now, and today is Wednesday, 10/12/2011. You can clearly see that these diagonal trend lines that I had drawn over here is very clear. This is where these particular trend line that goes right across here, this is where the weekly bull made that 2011 first top. Then from the very same point, we came right through here and made that higher high, where we reversed up here at the 1370 handle. And from 1370, we went down all the way to 1074. And the bull took a beating all year, and they're trying to get some money back, rightfully so. However, there are a lot of circumstances that play in. This is all standard technical analysis. MMTs use a different analysis that works quite well. So when we take the high reversal, when we go back over here, 1022 on the S&P back in this calendar year when QE2 was working, this was last year at this time, or 7/4/2010. On July 4th, we had this great rally up here. If I draw a diagonal trend line from that low, this first line that's going right across here, you can see it comes right to the bottom of these weekly bars in this top. And when we broke that, that's when the selling really got on. There is a third line coming off the same bottom over here. Same bottom that comes right through here, right through these tops at resistance. It goes right up here to my price target close enough, right below the 1250 handle. So until you have a closing price above here and a consolidation above, and I'm going to go back to the same thing when we were doing bull rallies up before, you got to close above 1220 on the S&P. You've got to consolidate where this breakout happened on the S&P. And nonetheless, you have to have 4 weeks to break the bear move down. You're going to have 4 weeks of the SMF qualifier that is 4 weeks above the blue line to qualify that you've got a new bull. You got a bull 7-day rally, but to qualify it in our term, as we said over here, when you were going down 1 week, 2 weeks, 3 weeks, 4 weeks, 5, 6, 7, 8, 9, 10, 11, we spent 3 months. Plus, look at all the bottoms that we have put in here and all the volatility year-end trading ranges. This is the time of year that equities are supposed to go higher. The problem is we're running quite well for 7 days going into an earnings season. And stocks in the U.S., the thing about this whole weekly move, the 7-day bull rally, is the key is that there is no more recession. It's gone, they say. The bull has convinced himself we're not having a recession. It doesn't matter about Europe. It doesn't matter about slow growth. It doesn't matter about anything. And it's showing up here from the bottom. And once again, they're buried because everybody was fully invested up here in the calendar year until this came along and we called for the complete disaster, and we got it well. We take upside moves, we take upside moves, we take the downside moves, but this was the buying opportunity down here, as it always is at calendar year lows on indexes, especially when you're not in the summer period any longer. You're in the period where money has to go to work. People are underperforming indexes. They're underperforming everything. Things were taken to the slaughterhouse, and they're finally getting a 7-day move to the top into the resistance. That's the weekly on the S&P 500. The thing about it is, until I close above this diagonal trend line right here and this line right here, because you can see from the same point to the reversal over here coming off that same trend line, we come right through there. That was the top, the 4-week top. Now we're in here where these tops have not been taken out. 7-day bull run. We had bull runs here. We had a 2-week bull run here. We had bear raids in here, bear raids back to the bottom, and all the calendar type of things. And we're going to be going into the earnings season. And this is what this move looks like. The thing of it is, that's definitely a turn. The percent DS is going up. It's a standard technical thing that people use. We don't, but we look at what the public does look at. It's crossing above. So you got all the bull moves, and you're above the 100-week. The 10-week is flattened out because of the amount of the 7-day rally. So some of the weekly moving averages are definitely turning for the bull. As far as the last 7-day rally within a calendar year low in 2011 from major reversals that we have called all the way in these markets, whether it was taking this market down short everywhere, taking it long, taking it short, it doesn't matter to us. We're qualified. We enjoy the kind of volatility. The bull's got a great move running. That's a weekly. When I take a look at it on a daily, I'm going to come right up here on a daily. You can see what a daily chart looks like, each daily candle. You've got the 1, 3, you got the 7-day rally right across these major tops. Going to have to get above that 1216 area, 1220 area on the S&P and consolidate. The daily moving average convergence divergence is about to pop what we call a daily buy signal, which would be another way of getting us through resistance for the bull. However, in every volatility upside one, this is the best one that we have had in the calendar year for the bull volatility. Bull volatility here, 5 days up, come back down. 3 days up, make lower lows in here. Here are some of the other bull moves we were in on the bottoms. And this is the best bull move of the calendar year so far. As October is usually, we put in the lows in October. Octobers can do that. Whether it's in the first week, first day, or the last day of the month, October does have a certain kind of trade to it. So basically on this daily chart on the S&P 500, what we're going to be doing is all the key daily movement averages are pointing up. They're flattening out. These are going to act as support level down here. When we do get some downside volatility again, the markets will have support here now. If we pop a daily buy signal, it's going to move the bulls off the sideline. Bulls have stayed out of these rallies because they don't know how to get in at the bottom because of the horrendous volatility. They don't know the mechanical side of what things are going to do for bull runs. Great to be long here, but great to be short all the way down to these bottoms that happened right there, because that was the bottom of that S&P. Most of the bulls start buying up here because they sit on the sideline in fear, waiting for confirmation. Well, they have already missed 6 days of the rally.